particular rejection that we have seen in the markets being reflected as the Sensex is down by 1,330 points and Nifty is down by 366 points. Markets has now become almost a barometer of what is happening in the West Asia conflict with this latest rejection of peace proposal. Now the impact clearly being seen. Markets have been falling. Sensex has crashed. Nifty has crashed too in a sharp reaction as hopes of a U.S. Iran peace deal fade yet again. There are other factors. Also, we'll be soon joined in by my colleague who is going to explain on what has been this impact due to and on what. Sensex is once again down by 1,330 points. Nifty is down by 366 points, declining sharply, even as oil prices are surging. Like I said, it is amidst dashing hopes of a U.S. Iran peace deal happening anytime soon. It's not as much about war as it is about the blockades and the oil supply. My colleague Ashish is now joining. Ashesha is now joining us for more on this. Ashesha, break it down for us.
Well, yes, turned out to be a weak day for Indian equity markets, much in line with what Asian markets were doing in today's trading session. And this is on account of, of course, on the back of Prime Minister Narendra Modi's comments that came in yesterday, where he urged Indians to reduce consumption of fuel, and that is what led to this kind of decline. But other than that, remember, Brent crude prices in the global market have been sustaining about that $110 per barrel. And for a country like India, which imports nearly 80 to 85% of its crude oil requirements, surge in gold prices, surge in crude prices clearly is a concern, and that is why we have seen this kind of reaction for Indian equity markets. Now remember, we ended with losses for the third consecutive day. At one point in time, we were well below that 24,000 mark. We did recover from the lowest point of the day, but despite that, we are ending in the red in today's trading session. So all in all, turned out to be a weak day. We have Indian rupee, which continues to remain under pressure against the US dollar. Gold imports have been surging, and that continues to weigh heavy on India's current account deficit. So several factors which continue to remain at play, but for now, we have seen some bit of negative reaction come in for Indian equity markets, with Nifty now hovering near that 24,000 mark, and some bit of weakness is what we have seen for Indian stock market.
All right. Thank you for joining us with those inputs. Obviously, the impact of what Prime Minister said yesterday also seen earlier in the day on gold and other inputs. Moving